Yes, wonderful good morning from Thailand. I am Christian from the channel Christian Economics. Yesterday we had the quarterly numbers from Netflix for the fourth quarter and all year results from 2022. And the mark reaction was very positive. So the stock climbed up from 315 US dollar to 342 US dollar. What had been the key facts that make the analysts and the investors so happy? So for the first, there was new customers from 7.66 million, and expected had been only 4.5 million new subscribers. So that's good. So the total customers are now 230.75 million subscribers all in all. So if we have the total revenue from 2022, about 31 billion, then we have 231 million subscribers. So this means every customer pays around 11.45 US dollar per month to Netflix. Yeah, the best was in the fourth quarter. There was the video about Harry and Meghan. This was very good, but also new series like Wednesday had a very good income and many views. So that was the positive results at all. And now we look at the numbers that we see here. So we had a revenue of 7.852 billion. This is here, and operating profit of 549 million, but this is not so important at the moment. And we had a 1 year revenue growth of 2%. And this makes me thinking because the management outlook also was not so very good for the future. So they feel the pressure of the competitors like Apple, Amazon, and Walt Disney. They are coming to the streaming market, and this makes the market more and more hard. And new thing is also that Netflix offers a new price model that is more cheaper, but there are some advertisements inside. So Netflix have two way. They get a lower revenue from the customers, but also get new fresh money from the companies that make advertisement there. So all in all, it can be a good idea to improve the revenues and the profits for Netflix. Let's see. But on the other hand, it means why they have to make the price lower. So it's not easy to answer this question, but some people say, "Oh, that's very bad. Now they have to lower the prices." But on the other side, they get more income from other companies that put the advertisement there. So what is also important to see, it's the valuation of Netflix, and this is what the most people not look at. So that's absolutely the most important number that we have. And the market cap is still 152 billion that we pay now for Netflix if we buy the stock now. And even the stock went down from more than 600 US dollar to 342 now. So it's like they lost half of the value from the top. And the earnings had been 2022 $10 per stock, and we see for 2023 for the current year the analysts expect a profit of 11.40 and 24. We don't know, it can be less or more, so we should not look too much to this number because no one knows the future. So at the moment, when we have a price of 342 per stock and a profit from 10 US dollar per stock, so it's very easy to calculate. So the price earning situation is 33. We buy the stock with a price earning about 33. That's quite high, even if you look on the growth. And the most important about the growth is the revenue growth. So if you can grow the revenue still, you are a good company. If you are steady or it's lowering, So it's not so good. So let's look, and we see here that the big growth isn't there anymore. We had just 2% of revenue growth. The last quarter was 6%. Before it was 9%. Therefore, it was 10%. But look at the absolute numbers we had in the third quarter 2021. Revenue of 7.48 billion. And now, 5 quarters later, we just have a revenue about 7.85 billion. Though this means Netflix is really not growing anymore. And these are the facts. And since a longer time now. And this is a good reason to understand why the stock didn't went down 20 or 30%, why the stock went down more than 50% from the top. And there is really a good reason to see. Let's go back in the past, how much they could grow. There was no quarter that was the same or lower revenue. Every quarter was higher, higher, higher. And we had revenue rose from 27, 22, 26, 31, 31, 28, 25, 28, 25, 23. And then it started to lower from 24 in March 2021 to 19, 16, 16, 10, 9, 6, and now we are at a growth of 2%. And this is the question: isn't it still too expensive? Even if we see there are giants like Apple, Amazon, Disney, they want into this market and get some market share from Netflix, and they are all not in the profit now. So, but every sees it's the future. It's the future business. Television is dead or is lowering. This is clear. It will lowering over the next decades, and streaming is the business. Is that what is in the future? But if there are so many competitors to win market share, so the question is what will happen with the margins in the future? What will happen with the profits of the company? So a normal company that is a non-growing company or just a little bit growing. So how much is a price earning then? And I think a price earning between 9 and 12 would be the real value for companies like that. So there are very, very difficult times ahead of Netflix now, because we don't know if the growth can accelerate anymore or not. And even if you have a business, you always have to put a very interesting series. You must to come to the taste of the people. So there are many, many question marks, and you don't know how good will be the company in the future. So my problem is not the company. My problem is the valuation of the company. I think the price earning around 34 at the moment. Of next year, maybe it's still 30, is quite high if we compare with non-growth, and if we compare to stocks that are articulated in the market, like Alphabet or Microsoft or Apple, whatever. So the multiples of the price earning is Microsoft is around 23, Alphabet is around 18, Meta platforms is around 12 and 13. So no one is expecting any growth anymore from Meta. Um, so that are stocks that are much more cheaper than Netflix, and I'm also a subscriber of Netflix. For me, I saw all the interesting series at the moment. So it's very difficult to find for me a new series from the stock that I'm really interested in. So it's just a new series that you can look and look, is this your style or not your style? And if the customers pay for that $11 or more per month, then the question is if this is a good entertainment investment for yourself. So that's the situation. So in my opinion, it's a very, very interesting company. The past is very, very impressive, but I think there will be many, many problems in the future for Netflix. And I don't think that the price earning of 30 or 34 can be kept on a long time. So my expectation is that the price earning will go down from Netflix. and so the stock have to fall more. This is my opinion. Even the numbers had been good. The stock went up 8% yesterday, but I'm very skeptic, and it's where will the positive surprise come from? I have no idea. I have no idea. Also, the outlook from the management was very conservative. So I think the stock is too expensive at the moment. Even it's a great company, but we should buy stocks that are cheap and have a great future. Yeah, so let's see. And by the way, I don't recommend any stock to buy or to sell. I just tell you my own opinion about Netflix, why I don't buy this stock, but I'm invested in meta platforms, I'm invested in Alphabet, but Netflix is not a stock I would buy at the moment. Okay, thank you so much. I hope it was interesting for you that I shared the new quarterly results with you, and hope you have a good day and see you soon. Bye bye.